So Warren Buffett increased his position by 31% and now currently owns 10% of the company. Should you be owning shares as well? Hey, and welcome back to another video here at FiscalVoyage. My name is Felix, and in today's video we're going to do kind of like a stock analysis or a quick review, because I actually did a stock analysis of this company, STORE Capital, a few weeks back, and I'll show you about that later in this video. But Warren Buffett just purchased more shares of STORE Capital. He increased his position by 31% and now currently owns about 10% of total outstanding shares for STORE Capital. So in this video, we're going to go over a few of the earnings report for the second quarter for the company, as well as the 6 month, the first 2 quarters for the company. Go over that versus the last year first 2 quarters. And we're going to look at the fast graph, as well as I actually bought shares of this company earlier in April. And we'll talk about that as well. Before we get started, if you're new to the channel, make sure you hit that subscribe button and check out my free ebook that I have in the description below. Let's look at this video here I did on STORE Capital. You can see here on July 24th, I uploaded this video, and the company had a price of $22.45. I had a fair value price of $27.80, meaning the company was undervalued at 23%, almost 24%. And I had a buy recommendation for STORE Capital. So from $22.45, if we look at the current price now, it's at $26.35. So it's up since that video, and I think it still presents a fairly value at today's prices. So we'll go over that. But first, I want to show you Warren Buffett, purchasing more shares of this company. So this is Warren Buffett current portfolio as of June 30, 2020. And you can see here, STORE Capital, the Warren Buffett owns STORE, it basically makes up 0.30%, less than a percent of his portfolio. And he grew it by 31%, 31.11% recently. So let's take a look here at the August rental, which the company collected 86% so far for August rent. So that's very positive. And as you see, it's up. July collection also increased to 86% from the previous announced 85%. So that's positive. So you can see it's on the uptrend. Not only that, percentage of the properties were open in August increased to 93% versus 92% in July. So that's a positive news as well. So let's take a look at the company latest quarterly release for the second quarter. So here's the announcement, or the press release for the second quarter for STORE Capital. As you can see here, it was announced on August 5th. And let's look at the revenue for the quarter and for the first 6 months as well. For the first quarter and the second quarter, as you can see here, total revenue did increase for the quarter of the second quarter from 163 million to 168 million, and it's also up for this first 6 months, which is really good actually, because with the economic shutdown and retail stores shut down, they actually made more money the first 6 months versus the last year's 6 months. And not only that, they've paid out actually a higher dividend for the first 6 months, or the first 6 months here for 2020 versus the first 6 months of 2019 here, by 4 cents, and by 2 cents from 33 cents for the second quarter of last year to 35 cents now. So that's very impressive that they're still not only were able to generate more revenue than last year, the first 6 months, but also pay out a higher dividend. Let's look at the balance sheet for the company. You can see here the biggest change that I noticed here was the cash equivalent. They've increased it from 99 million to now 600 or 700 million. That's a huge increase, but this is because from the liability, they had an increase from a credit facility of 600 million. So that's why they now have basically almost 700 million in cash. This did increase the total liability from the company from 3.8 billion to now 4.4 billion. So now let's look at the funds from operation. Since STORE Capital is a REIT, this is the number, or the statement you would like to look for in analyzing REITs. For example, for the company for the second quarter, it did drop slightly from 107 on 2019 second quarter to now 105 million for this second quarter. But the first 6 months, also very higher than the last 6 months for 2019. So that's very positive. So this is a nice increase. And the adjusted funds from operation here, as well as the funds from operation per share at 92 cents and 93 cents versus 94 cents and 99 cents. So it did drop. However, the company, this is higher still than the dividend. So from 92 cents, and you remember here the dividend was, where is it? Here, 70 cents. So the payout is very well covered here. So the company earned 92 cents for the first 6 months, and they paid out only 70 cents for the first 6 months. So that's very impressive there, that they're able to continue paying the dividend and still generate, a good amount of net income and revenue for the first 2 quarters of the year. So here's a fast graph for STORE Capital Corp. For retails, you have to look at the operating cash flow or the free cash flow. We'll look at both in evaluating this company. So if we're gonna remove this one here because it is like an anomaly. So let's remove that one to 7 years, and this gives a more realistic chart and graph. You can see here the growth rate was only 5.2% in this recent time period. The average growth rate yearly, and it looks like the company is expected to be down this year in the funds from operation to $1.82 versus $1.99 from last year, but picking up to $1.95 for 2021. So that's good there. And as you can see, the difference in the funds from operation to the dividend payout. This gives us a payout of 76 cents or 76% or 77% here. So that's very positive. It gives us plenty of room of dividend coverage and growth. So I see this company actually maybe even growing the dividend slightly here. You can see here the company tends to be between the 15 PE and the 16 PE. Anything higher than the 16 looks like the company is overvalued. But basically, if we go to a PE of 16 or price to funds from operation of 16, you have a total annual rate of return of about 20% for the next year or so. If we go out further, let me get rid of this here. If we go out further, you have a 14% annual rate of return. And let's see how accurate the analysts are with predicting these estimates. And they've been pretty accurate, 80% hit for the 1 year with a 20% beat that the company beats. And for the 2 years, 100% hit. So these estimates are pretty accurate. I'm very confident in them. So let's see here the forecasting. So you can see here future forecasting is not expected to grow too much, only about 1.5% analysts, and there's 15 analysts predicting this growth rate. You can see here if it were to return with a PE of 15 or 16, you could generate 13% at a 15 multiple and almost 20% at a 16 multiple. So this company is not high growth or great return that I'm seeing here. This is why I think it's fairly valued at current prices. But if you bought it, and I bought it actually lower than the $22, I'll show you that later. But I didn't buy too much shares, but I bought a few. But if you bought it in the $22, which is around here, the company would have been up slightly. Here is around here. Let me see, you would have gained about 11% in just in a month. So that's very positive. But as you can see here, earnings are expected to be flat, so not too much growth there. And I think it's still a good buy at current prices, but I just it's not like a screaming buy as it was earlier. And let me show you when I purchased shares. So here's my transaction of STORE. I bought 5 shares at $17 and 2 more shares at $16. It's not a lot. It's only like $100 of shares. If I had more money to invest, I would have invested more. But that was all I had at the time. But whatever I have at the time is what I invest, right? That's how you grow your income and your total portfolio. So as you saw, I only bought a few shares of STORE Capital. I wish I bought a lot more shares. Right now, it's a pretty good price. I wouldn't say it's undervalued. I'll say it's kind of fairly valued to slightly undervalued right now. But buying it right now wouldn't be a bad choice. I would recommend you to do your due diligence and your research of the company. But Warren Buffett did buy he increased his position by 31% and now currently owns 10% of this company, STORE Capital. So I still think it's a good buy at current prices, but make sure you do your research. I don't think the earnings for the future are expected to be kind of flat to about 1 or 2% increase. But the dividend is very safe. It pays out a very good, healthy dividends over 5%. Very well covered. So again, if you're new to the channel, make sure you hit that subscribe button. And if you like this video, make sure to hit that like button. And make sure to check out that free ebook that I have in the description below. And thank you for watching. I'll see you guys in the next one.